Good morning and thanks for watching. I'm Pat LaChapelle. I'm working more today on my stock market tool. And I have some time today, so I'm going to spend some time going over everything before I get started. Talk about the goals for the project, where I'm at today. It's currently 2:46 in the morning, so the market's going to open in 4 hours. And I'm hoping I can start paper trading before the market opens. So that's kind of my goal for the stream. But like I said, I'm going to talk about stuff. I work on this project every day. So if you're interested in this sort of thing, quantitative finance, Python, coding, AI for coding, I use AI a lot. Any of this stuff, follow along because I work on this every day. So subscribe and you can see my daily updates. Once I start paper trading, I'll be posting the every day. I'll post the positions that I'm opening and closing at the open of the market, and then at the end of the day, or maybe I'll just do it in the morning updates. I'll update how the performance is doing. I'm going to paper trade for a month, and then if that goes well, I'm going to go live with real money. And I have a few things to tweak and update, but we're ready to start paper trading basically. So let me yeah, and then I'll just keep adding models, and my goal is to have maybe a dozen models which have low correlation between each other, that I can be implementing, and then set up some live monitoring software, so that basically I'll just turn them off and on when the conditions are sufficient. So this is the general overview for the project. So I have two goals. My first goal is to beat the S&P 500 by a significant margin while remaining market neutral. So the S&P goes up on average 6% per year. I want to do significantly better than that and get 18 to 24% per year. However, I want to stay market neutral. I don't want to have to worry about being in a recession or a bull market. I want to reliably generate that 18 to 24% annual return, regardless of the market conditions. So I want it to be neutral to the market. Now I'm writing all the code to do this in Python. So this is like there are some very general things like building the backtesting framework, and then there's the specifics of the model, like the exact features I'm using, time windows I'm using, etc. So the features of the model are my secret sauce, but all of the programming, my secondary goal is to open source, generalize the code and open source it so anybody can make generally these types of strategies for themselves. And if you look at the bottom here, I'm starting by outlining, I'm starting by isolating a universe of stock data. Once I have a universe isolated, I'm feeding that into a returns model. This is predicting something like returns over the next 5 days, Sharpe ratio, log returns, returns relative to market, etc. And then once you have a good returns model, the final strategy is to go ahead and implement the portfolio. So I started this project at the beginning of the year. This is where I was at the end of January. Basically, I had created a model. I built some infrastructure for getting data and stuff, but the model was very fragile. One last thing on here I'm going to say is that in terms of generalizing the code, I have it so that now you can create a universe, create a model, analyze the model robustly, and then implement a portfolio strategy. I call that model, but really this should just be a strategy. All of this happens in under 100 lines of code. So if you're interested in that, check out the GitHub repository. The link's in the description. Download it, fork it, let me know how it works for you. Let me know if there's any features you'd like to see added. And of course, if you find it useful, please star the repository, watch the repository, and follow me on GitHub. So yeah, like I said, this is where I was at the end of January. Now the repository was really a mess, so I had to go through and clean everything up, and basically make the code base general. I did that. I added all of these features, and since then I've added a lot more features. Um, so I went through and made sure all the features worked, and then I started looking at models. So at first it was kind of hard getting something that was robust. This looks pretty good. Um, by the beginning of April, I basically that code restructuring I finished at the end of February. I spent March looking at models, and then at the beginning of April, I happened upon a really good model. So why did I think this model was good? Um, Let me go to it. So first off, I'm looking at these metrics highlighted in the red box. The first one is the information coefficient. That's telling me about the predictive power of the model. The next four metrics are the telling me about the stability of the model. So you want something that's really powerful, but you also want something that's stable. So when it's right, it's really right. But when it's wrong, it shouldn't be too wrong. Um, and so my goals for each of these metrics for the information coefficient is 0.01 to 0.02. I'm getting 0.047. For the standard deviation of the information coefficient from previous studies, it should be 3 to 13 times the information coefficient. Here it's about 3 times, so that's good. The information coefficient to information ratio on a daily basis should be 0.03. Here it's 0.3, so larger by an order of magnitude. On an annual basis, it should be 0.3. I'm getting 2.2, so again, larger by about an order of magnitude. And then the t statistic, my goal is 1.98, and here I'm getting 3.8. So it's significantly above all of my goal metrics. But not only that, the decile analysis looks really good. This is the hallmark of a perfect decile analysis. The bottom decile should be the worst performing, top decile should be the best performing, and it should be monotonically increasing in between. This basically just means that each decile is higher than the previous decile. So not only are the metrics good, the decile analysis is exactly what I'm looking for. Now, this is just for a single model. This is only being tested from mid 2023 through the beginning of 2026, or sorry, the end of 25. So, a more robust way to test this is to do a walk forward analysis and train a model each year from 2016 through 2025. And when I did this, I was still getting above my goal metrics for every year. So, based on this walk forward, the decile analysis, and also the metrics from the single model, I concluded this was a good model, and I went forward. Hey man, how are you? I went forward and started looking at portfolio strategies. So I found something kind of interesting, which is that if I tried to implement a portfolio strategy after 2023, almost everything was working. It was really easy to get something that worked. However, when I went back to 2016, did the same portfolio strategy on the walk forward results, um, it was pretty different, and it did really poorly from 2016 through 2022 and only did really well in the same region since mid 2023. And so there could be two reasons for this. One, if you look here at the right, the dispersion of the market increased significantly in 2020. So this is due to stimulus checks. There was a flood of cash in the market that caused a big spike in retail traders, and also the rate of new stocks being listed went way up in 2020. So that's one thing it could be. The other thing it could be is interest rates. They were notoriously low, around zero during the 2010s, but in 2022 they became non-negligible again. So those two things changed. I looked at the model. I found that the decile analysis actually wasn't perfect every year. It's not perfectly monotonic every year. So I tried improving the model. Um, and basically, I did that. I got. I'll just skip a little bit. I found some really good general portfolio strategies. Tweaked it, tweaked it, tweaked it. And where did I end up? Here. Um, This is basically a really nice portfolio strategy. The drawdown is always the worst drawdown here is 18%. Um, Worst drawdown period is 164 days. So this looked really good. But I started looking at this, so I wanted to look more at the deciles. So I looked at three different regimes. So I looked first at 2016 to 2019. How did the deciles perform? Then over COVID, 2020 and 2021. And then recent times when the model's performing really well. And so you see the early times when I'm having trouble implementing the portfolio strategy, the bottom decile is actually the best performing, and the top decile is the worst performing. So if I were only going long on the top decile and short on the bottom decile, you see during these first two regimes, basically from 2016 all the way through 2021, it would have been losing money. However, 2022 through 2025, there's good separation between the deciles, and you see the bottom decile here is the worst performing, top decile is not the best performing, but it's up there. Much better performing than the lowest decile. So I was looking at that. So then I generated some new models where I'm trying to predict returns instead of the Sharpe ratio. So that model was trying to predict the forward Sharpe ratio. And these models just don't look as good as the Sharpe ratio models. That kind of makes sense. Since the Sharpe ratio has volatility incorporated into it, volatility is a lot easier to predict than returns. So, the Sharpe rate, that kind of makes sense. The Sharpe ratio is easier to predict. So, I've decided to go ahead and start paper trading. These are some of the portfolio strategies when I implement the returns model. So I'm going to start paper trading using both models. So the Sharpe ratio model and the returns model. And then I'm going to try some different portfolio strategies. So I end up with this matrix of models. And I'm going to paper trade all of these. But I want to get started on paper trading one of them. So I'm just focusing on this simple returns model. And so this is my goal for the stream today, is to basically create a script, finish the live code. So thank you, man. I appreciate it. Finish the live code for this. So I want to, the market opens at 6:30 West Coast time. I'm in California. So 6:30 a.m. my time, the market opens. And it's currently 3 a.m. So I have 3.5 hours. Let's see if I can get the live code going so that I can start paper trading today. So let's, I forgot what I'm looking at here. Oh, so this is running the live strategy. So I'm looking at the data here, and you see, so I haven't pulled the data from yesterday yet. So this is what I was looking at around this time yesterday. So today's the 22nd, but imagine it's the 21st, and I've pulled data going up to the 20th, and I want to generate predictions for the 21st. The problem I'm having is that the date, if you look at the maximum date here, it's the 20th. There's no date for the 21st. So I'm going into the data frame and trying to pull today. Hey, Global, why'd you send go 3 times? Go, 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 where? Go where? Anyway, good to see you. Thanks for tuning in. Yeah, and so then, so if you look at the code, so in predict, prepare live data. So somewhere I'm defining today, mask df of date. Target date, start date equals target date. Okay, so then we're just isolating this data from the start date up to the target date. So basically I need to add a fake date row in. 3.5 hours. Yeah. Well, that's what I'm thinking. Hopefully I'll, be able to start paper trading. Let's keep it simple. Let's just focus. Let's start paper trading on a single model. Keep it simple. Yeah, it's 6 months. I don't know. It's longer than I thought. Initially, I thought I'd start paper trading March 1st. That was my initial goal. So, but that's always what I do with goals. I set a goal and then it's way too quick. So, target date, start date. Let's see. When's target date? Target date's called there. Filter condition in date is less than or equal to target date. Yeah, so the problem is there's no target date. So then let's get the error. No predictions generated for target date. Okay, I'm gonna put some music in. Let me know if you guys have any song suggestions. I need something upbeat. There is no one. Okay. I will be jumping over you like dirt on a mattress at my feet, and all Phil Jackson says is you better be passing it to put the master in the piece. Attack it like a beast. and that means I'm going to eat. Then the answer should be meat. Because you never know what you're going to get. Kobe, Mr. Clutch. Oh, Mr. Automatic. Going for the ring, I'm going for the ring. I went to Beijing and came back with the bling. Who they want? They want Kobe. And what they want? They want the trophy, the victory, and the glory. No Shaq, no Robert Ory. Okay, so the error, no predictions generated for target date. Do it for magic. It's more than a game. This is a passion. AKA MV me in knee deep smash in knee D. Tobey Maguire got bit by a spider, but see me, it was a goat. Come on, why is this thing taking so long? When at the last stream, the last thing I did was ask Claude a question, and it thought for like 20 minutes, and then it said I'm out of requests. Alright, this is kind of boring, so let's see if we can dig through this. So, the problem is that there's no data for today. I want the features to generate. Bit by spider, but see meat, it was a goat. Toby Maguire got bit by a spider receipt. Okay, let's run it again. Now, where do I put the debugger in? Oh, oh. I want to reread the current file carefully. Blah, 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 blah. There are two things going on. The literal reason it crashes on line 220, you compute prediction date. So you compute the fallback date and then don't use it as a half applied version. But here's, yeah, obviously it's the wrong fix. For a date that has no bar of its own. What does that mean? Computes a lag draw. Couple cars I'll never drive. Bikes I'll never ride. I got. And they all bitches. But I'm not Sean. Let me just make sure I'm getting that error. Wait, how does that make any sense? Now, why is this not pro? Oh, they changed how their format works. Okay, let me look into my Google account real quick. Subscriptions. Oh, it's because my payment method isn't working. Okay. Yes, it's me. Let's see if that works. Okay, just a sec. I gotta go grab my wallet. Who's a good boy? Sorry, I just have to put in my payment information for the AI now that I'm dependent on it. Good, now it worked. Okay. Don't worry about the temporary file. I am actually pulling data using what is it? Data retrieval slash setup data. So let's give it clean analysis. And let's also give it data retrieval. What was that called? Setup data. Oh, really? I haven't changed it since February. Let's see if that works. And moment of truth. How much money did I make that portfolio? $200, $400. So let's just say it's $2,000. See if the number of shares, I think it's just rounding. Hey, Kevin. How are you? Good morning. Ugh. So I don't get, let's see, what's it, the total allocation? $10, 15, 26. The allocation isn't very much. Like, yeah, let's just try 10x in it. 100x in it. Let's do $100,000. Really? What are you doing? That's exciting. Congrats. Are you the Kevin? Are you the guy who's you're like a PhD student in the DMV area? Do I have that right? So these positions should 100x, right? 100. 50x. Yeah, so the positions aren't changing. Oh, well, what are you doing? What are you doing with Anthropic, Kevin? So what's that file look like? I mean, what? Okay, well, we could just delete it. Okay, well, if I could just get it going for one strategy tomorrow, I can generalize this over the weekend. So let's run it again. So don't do 100K. Just do a simple $2,000 account. Let's see what we get. Enterprise sales. So what's that mean? Is that business to business sales? So if I have 2,000, I could actually implement some. I can still go long on everything, but I can't go short on everything. HTCO. So what? That should be like $6 a share. Yeah. I haven't even heard of most of these companies. So what if I mean, I'm not going to be able to allocate target volatility 0.08, volatility look back 20 days. So what model do I want to use? This one? I think so, but let's make sure this works. So if we go back here, model 28. So I said here $2,000. Yeah, what if I have a $3,000 portfolio? $3,000 is like my limit of what I can do. Alright, so let's go back here. Let's do how many longs and shorts? Let's do 10 positions, target volatility 0.06. Well, what if I just do 5 positions? Hold for 5 days, rebalance every day. What if I rebalance every 5 days? 120-day look back, smooth, true, buffer 1.5, cost BPS 15, beta neutral, target volatility, let's make it 0.08. Okay, let's see how that strategy does. Okay, I'm gonna go grab a Dr. Pepper. I'll be right back. So this had a bad drawdown during COVID. What was the duration? 800 days. Alright, so this I don't want to implement. But it would be good to just buy 5 stocks. Because that would make my realistic one closer. So that volatility scaler is fine. But the drawdown's too much. Alright, so we need to document this. So let's say $28, $20, $25. So I guess just 10 stocks did better though. All right, so what do we say about this? Uh, COVID drawdown was too extreme in magnitude and duration. So there is extreme scale down during COVID, but it scales right back up and then loses money. I think that's what's going on. Oh, I exited out of that. Um, so I can increase the buffer multiplier. Oh, that's with 5 days as the rebalance. Okay, so let's try 5 day rebalance. Just would have been nice because we'd get bigger positions, but let's just try a 1 day rebalance. So that's if I have $3,000. What if I just try 5 longs and shorts? Um, Live strategy. So now what happened during COVID? Daily rebalancing much better over COVID, but worse on recent times. So if there's only 3 effective, what if we just try 3? And let's increase this to 2. Then I'd be able to go in on everything. If I have a $3,000 account going long short, when your trials showed inversion of performance of top and bottom quantiles, isn't that evidence of mean reversion? Evidence of mean reversion as opposed to trending. Well, I would assume the opposite, because the that inversion happens really 2016 to 2022, and then it's correctly separated 2022 through 2026. But 2016 through 2022, isn't that generally a trending market? Oh, the opposite of mean reverting. So you think when it's performing well, the market's mean reverting. When it's performing poorly, the market is trending. Is that your assumption? Yeah, that might be the case. That would kind of make sense to me. Yeah, so that's much better. The returns are much higher. Drawdown duration's about the same. Three positions per day. So, oops, I shouldn't have exited out. So what if I do 3 positions per day? Rebalance every 5 days. Then I could really implement a small portfolio with this. So wild volatility over recent times. Probably I don't want to implement this. What? So what was this again? Oh, 5-day rebalance. But what's the profit? Big profit. Alright, so let's think. So this is with 3 positions, rebalancing every 5 days. So what if I do that? Yes, when you have good performance in one period, the next period will be bad. Assuming you're rebalancing often, that definitely indicates mean reversion. So now I need something that does well 2016 to 2022, right? I mean, this is crazy. Scripts, portfolio. Yeah, so that's a $3,000 portfolio. So this is 3 longs, 3 shorts, and rebalance every 5 days. Oh, but that's because I'm doing a 1-day rebalance. So rebalance stays to 5, and the position size should increase. What is this? 3 positions, 5-day rebalance. Good, now we have big positions. So this is one thing I can do. Rebalance every 5 days. We'll try that strategy. We'll do 3 positions each side, 5 positions each side, 10 positions each side. Rebalance every day, rebalance every 5 days. That'll give us 6 strategies. That I'm going to start with. So, rebalance every day, rebalance every 5 days. 3 positions, 5 positions, 10 positions. So simple strat, 10 longs and shorts, 5-day rebalance. Simple 10, 5. Simple 5, 5. So this one's 28, 20, 25. Simple 10, 1. This guy's that, and then add a 1 at the end. $28, $20.25, simple, 3, 1, 28, $20.25, simple, 3, 5. All right, these are the first models I'm doing. So what did I conclude here? How many positions? 5 positions. All right, so we need to develop a strategy for each of these. So let's make a new PowerPoint. Call this paper trading 5/22/2025. So we're going to change the number of long shorts. We're going to change the rebalance days. And that's it. $28, $25, $25. Alright, it's 4:30, so we have 2 hours. I basically need to hone down these portfolio strategies and then run live strategy, save the outputs, and document everything. Then I've got to get up by 6:30 and document everything live. So I'm going to go to the bathroom really quick. I'll be right back. Thanks for watching. Don't forget to subscribe. All right, so I've got some models. I've got everything working. I've gone to the bathroom. Um, Now let's finalize some portfolio strategies um, for each of these models. How many do we have? 1, 2, 3, 4, 5, 6. Six different portfolio strategies on this single model. Um, and then I have a few more portfolio strategies I'm going to incorporate. I'm going to do some optimizations, but I could start trading all that stuff Monday. For now, I'm just going to focus on this. Okay, so I mean, it is lowering the. Maybe I could be less aggressive on the volatility. Let me try that. Five longs, five shorts, holding period 5 days, rebalance days 1, HRP look back 120, smooth predictions true, buffer multiplier 1.5, cost BPS 15, beta neutral, target volatility, so let's increase that. 21, 1, 1, false, okay. So let's run this. I don't remember what this was. Let's see, it's 4:45. So let's see if this improves things. Okay, so that's worse. So I think I'm going to try um, lower volatility, and then we'll get a good range. So let's try 0.05, and let's run that. See how it does. Okay, and let's just wait for this to finish. Alright, so here are the results. Looks about the same over the recent period, so... but the drawdown's lower, I think. Lower or about the same? Yeah, lower, so that's better. So anyway, that's it for tonight. I set an alarm for 6 a.m., so I'm going to take a nap for an hour. Then I'll wake up and go live again, and I'm going to implement this model, a single strategy for paper trading. So thanks for watching. If you're still available in an hour, tune in, and I'll be going live. And it's the first paper trading, so it's exciting. And I'm going to track it for a month, see how it does, and if it does well, I'll implement this in my portfolio. So, thanks for watching. Have a good day. Adios. Thanks, Global.